It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we got Margot Micallef. She is the founder and CEO of GABY. Margot, thanks for being with us at the Talking Hedge.
My pleasure. Thank you for having me.
So my understanding is GABY is a vertically integrated cannabis operations. You guys are based and operate out of California. Is that right?
It's partly right. We're vertically integrated downstream of cultivation, so we have no cultivation. We're really focused on retail, so the vertical integration is really for the benefit of our retail operation. And yes, we are totally focused in the California market. We're headquartered in San Diego, and that is where our flagship retail dispensary is located, which is called Mankind Dispensary.
Okay. Are you guys limited? I mean, I know that California is the 5th largest GDP in the world, so you have a lot of options from Redding to San Diego. But Washington State, where I'm from, I'm in Seattle, we have limited 6 stores per state. Do you guys have limitations down there? And how do you decide throughout that gigantic state of California where to have retail stores at?
The limits are dictated by the local authorities. So there are limits in many of the jurisdictions, I'd say in probably most of the jurisdictions. How we decide what markets to go into is really focused on what the opportunity is of the dispensaries that are available for sale. We do intend to apply for greenfield licenses, but we haven't done that yet. We're just assembling our team to do that. Or is competition. We look at whether or not there's a lot of illegal dispensaries nearby or in the geography itself, because it's fine to compete with legal dispensaries because we're all playing by the same rules, but the illicit dispensaries are a challenge, so we would stay away from a location that would be too close to an illegal dispensary. We look at the retail presence, is it foot traffic, is it drivability, is it accessible? Sometimes you can be on a freeway and have 10,000 cars drive by you every day, but if they can't get to you, what's the point? We look at signage. Are we able to improve the signage if it isn't adequate enough? Thinking of what else, we look at the demography. What's the retail consumers like? Are they typically somebody who would shop in a cannabis store? So we look at a variety of factors. There's probably a few more things that on our checklist, but that's kind of the general thing that we look at. It's somewhat planned and it's somewhat opportunistic. Because we chose our first location to be San Diego, which is a very strong market, and the Mankind Dispensary is a very strong foundation, we're heavily focused now on Southern California. Not to say that if a good opportunity in Northern California came up that we would pass it by, but we're really looking more in SoCal. How we want to operate is hub and spoke strategy. So Mankind is now our hub in SoCal, and then we'll branch out from that. So what we'd like to do is find a similar hub in NorCal. And so if that opportunity came up, we would jump at it. But we're, as I say, in terms of the fill-in locations, we're really looking at SoCal right now.
I know that Venice Beach isn't anywhere close to where you're at, but I am curious about the market in general and kind of what's been happening post-pandemic. We saw a lot of delivery kind of get maybe see 10 years advancements with delivery in general, cannabis industry obviously benefiting from that as well. What happened to Venice Beach? There was, you had Muscle Beach, and then now it just seems like all of these stores have vacated. Does that provide an opportunity for you, or are you just looking at that in horror like a lot of other people?
We're looking at it as part of our overall plan. It's not something that we're going to jump into. So, part of the analysis is where did all the other stores go and why did they shut down? What was the problem in that market? And, can we overcome it? We tend to like the strong urban markets. They're just easier in terms of the demography and the population base that we have to draw from.
Okay. You mentioned that the illegal dispensaries, and you kind of stay away because they're difficult to deal with. I noticed that Weed Maps took their sweet time taking some of those off their website. And I know that there's some regulated stores and operators that are taking an even stronger approach using the RICO Act against some of these illicit stores. How prevalent are they? I know that they were part of the issue. The illicit market, however, was an issue with VapeGate, vitamin E acetate. I don't know if the illegal dispensaries were selling those or not, but how much of an issue is it for your business or just for any regulated business in California?
It's not, I guess I would say it's a problem, and it's not a problem for us currently. So let me explain. Right now in San Diego, there are, to my understanding, no illegal dispensaries. The San Diego City Council did a really good job of cleaning things up locally. But we are affected by cultivation and prices of flower. So we have our own brands that we bring to market. And our margins right now are in the 70% range for our proprietary brands. When the illegal market or the illicit market in the flower space in terms of sales of raw product is high, it impacts our ability to generate our own proprietary products and put them on shelf. It also creates an instability in the supply chain. And, in order to really grow the industry, the first thing we have to do is stabilize the supply chain. So from a cultivator's perspective, the illegal market is much more of a problem for those that are operating in the legal market. There are some people that say that there is no cultivator that is 100% operating in the legal market because the taxation and the competition with the illegal market is just too great. I can't say whether that's the case or not, but we are all impacted by flower prices. And at the end of the day, when flower goes into the illegal market and they're not paying taxes, and they can pay a higher price for it, it really messes up the whole supply chain and the whole pricing regime.
Let's compare hemp now, and maybe I'll ask you for a crystal ball prediction on cannabis, if based on what hemp is doing. My prediction is that anybody utilizing Puerto Rico, for example, are going to be some of the survivors. Anybody who can generate higher margins. Puerto Rico being an American territory, but they don't have to pay federal taxation because they don't have representation. Can't have taxation without representation. So it's the only place in the world an American can go and not pay federal income tax. So that would be an advantage for hemp farmers, having a 37% higher margin than a hemp farmer in California. Once cannabis becomes legal, then we have those additional factors to kind of price into wholesale cannabis. Colombia and Peru already saying that they can get 15-cent GMP certified price per gram, including landing costs. Some of them are already in Mexico preparing to get through what used to be NAFTA. When federal legalization happens, I'm assuming Canadian companies selling at $6 a gram are gone. What happens to the rest that are in the US trying to produce when cannabis prices could follow tobacco wholesale prices at $20 a pound?
So I actually think that people talk about legalization and talk about that as if it's going to open up the market completely. I actually think it's going to be staged, and I think that before we get to that space where the market will be totally open, it'll be years, and I think it'll be quite a number of years for a number of reasons. Number one, the state wants to continue to receive the level of taxation that they've been receiving. Number two, there's a lot of very big MSOs that are worth a lot of money that have built out the infrastructure in every state in which they operate. And they're going to lobby hard, to prevent the opening of the state borders. There will be a time eventually when I do think that there will be the ability to do interstate commerce. And I think it will start with local geographies. Like I can see, for example, at some point, and I don't think it's going to happen immediately upon legalization, but at some point I can see, Colorado, California, Oregon, Washington creating some kind of a trading, market. But, there's a problem with there isn't a lack of supply. There's an abundance of supply. And I think every state is going to want to protect their territory. Once the first thing that we have to do is stabilize the supply chain within each of the different states, because that allows the pricing to be stabilized, and it can allow for control around the supply and the oversupply. And in that respect, the state government needs to get involved in terms of understanding, just how much cultivation is out there. They say that in California, 2/3 of all sales go into the illicit market. So how do you create an industry when you don't really have the data as to what's really happening at the base level when we're talking about cultivation?
Yeah, that staged process that you're describing, is that somewhat like what we're seeing in Canada, or is that just straight out protectionism where lobbyists up there have kind of stopped the Colombia importation, even though they themselves don't seem to really understand the market because they sent radiated cannabis to Germany, and Germany's like, what are we going to do with this? You get this out of here. So seems like it's fairly bloated. Like you mentioned, that there's a lot of room for consolidation, capitulation. Is that just straight up protectionism? Kind of a loaded question.
Yeah, and I can't say for certain. I'm not as familiar with the Canadian market. I do know that the quality of the flower in Canada is not as good as it is in the US. And forgive me, all my Canadian friends who are in the cultivation business, but that's just a fact. And I think what's going to happen is as the market opens up, the quality will improve because the pricing will stabilize, and the poor quality cultivators will just frankly go out of business or have to improve the quality of their product.
Mm-hmm.
So protectionism will help for a little while, but eventually the markets will open up, and then it's just a function of, who's got the best product for the best pricing and can offer the best deal for the consumer. And I don't mean when I say the best deal that prices are going to bottom out. I believe it's going to be a function of, what do we have to offer for the consumer to feel that they've gotten value, and it's a price quality, proposition.
Yeah, the majority will probably go for price and convenience, but the rest of us are going to wait for that value to come. And maybe that's the third wave when the equivalent of, mom and pop baristas or the microbrew equivalent comes out, where you actually get some of the flavonoids and terpenes, where it's just really funky smelling when everyone else has got their, $500 a pound Budweiser equivalent, whatever that is. There's room for the rest of us who want more of a discerning flavor and unique profile.
Yeah, I think it's a function of the market maturing. And speaking about the California market, we still see that the majority of the consumers that come into our dispensary and that we see in the marketplace are still very much the traditional consumers. So part of our strategy, for example, would be to make sure that the dispensaries that we open attract not just the traditional consumer to whom we are extremely loyal, but we open up the market to the mainstream consumer. And everybody's been waiting for that, soccer mom and, dad to come into the store and really come into the industry in a big way. But if you look at the dispensaries that are in the market at present, they still very much cater to that traditional consumer. And it's just not a good experience for the mainstream consumer. Many of them want to come in. They're very effect oriented, so they'll pay the price if they get the effect they're looking for from the product that they want to buy. But there's few and far between in terms of the dispensaries that are really inviting. Thankfully, I believe that the Mankind dispensary is truly an inviting atmosphere, and that'll be the foundation of the dispensaries that we open or the dispensaries that we acquire, to have that inviting atmosphere for both traditional and mainstream consumers. But as the mainstream consumer comes into the market, then quality, flavor, profile, will matter more than price. So I think it comes down to a maturation of the marketplace, and that's coming. It's very slow, but it is coming.
Mm-hmm. Yeah, I would agree with that. I think brands are becoming more and more important. It's less of what's the highest THC at the lowest price point, more about the repeatable effects. We don't really have accurate dosing quite yet with some mechanisms, but brands are providing some consistency. And so I think you're going to start to see a reliability, consistency, and then brands that are able to market towards emotion, like traditional advertisers are, that will definitely bring in a lot more new clients. I am curious how you're doing it though. Mankind, you mentioned in your vision statement, I believe, that going after traditional and new customers, and I'm curious how you go about doing that. I find it very challenging to educate and then sell, and so I'm kind of fascinated by how people do that. I believe everything is about user experience. I know I mentioned price and convenience and all these other, factors, but really what brings people back is the experience. And I don't care if that's a movie, a restaurant, a rec shop. If there's no experience, people won't come back. But how do you provide a unique experience going into Mankind for somebody who's new, and then they see 2,000 SKUs that are somewhat overwhelming, and there's these words like sativa and hybrid and indica and things that, in high school or college, when they tried it, they didn't know what that was. How does Mankind provide an opportunity for not only traditional but new users to experience cannabis?
So first of all, the atmosphere has to be inviting. So people have to want to go into the store, and that means the decor of the store. It means the way that they're treated when they get into the store. It means the location of the store. It means the outside decor of the store. So it has to just look like something that people want to go into. Now, traditional consumers are less concerned about those factors, but the mainstream consumer, is intimidated by a lot of the traditional style of dispensaries. The other thing that we do that is different is that we have a self-serve model. So all of our products are out on the shelf. The consumer helps themselves to the product. They can touch it in their hand. They can read the description. They can look at the packaging. They can get a sense themselves whether it's something that they are interested in trying, just based on their interaction with the product directly. The other thing we do is that we have a very well-educated staff. So because the staff is not running around getting product for the consumer because the consumer is not able to bring it to the cash register themselves, our staff walks around the store and educates the consumer. They ask the consumer how they can help. They ask the consumer what they're looking for. They make recommendations. They educate the consumer in terms of what the product is that they're looking at, what the effect is, and we're getting more and more consistency in terms of the quality of the products and the dosage and the effect thereof. And so, in terms of the experience of the consumer, they walk into an inviting environment. They can interact with the product themselves. They're not intimidated by having to wait in line and then having to make a decision quickly because they've got people behind them. They can take their time to shop. They have an educated staff that helps them make a decision. And our selection of our products is such that the quality is good enough that we can feel relatively confident that the effect will be the same from week to week and from month to month, etc. So that from the consumer's experience, they have a good experience in our location because of all of those factors, most of all because they get what they're looking for week in, week out.
With bud tenders, they tend to be the front-facing customer, right? But any other industry, they would be essentially replaceable. Yet there's a specific need, requirement, and education behind that in order to get any kind of sense made from these 2,000 SKUs. Before the pandemic, we saw a lot of turnover in the industry. I'm curious how you're able to establish kind of some consistency for people to go in and see the same face, or how do you provide a good morale or a place to come and congregate for employees? How do you prevent the great resignation that we're seeing so much about? What is it that you're doing to kind of create an atmosphere of inclusion and high morale?
Well, the first thing that we did when we acquired the Mankind dispensaries, we gave everybody shares. So every single full-time employee in our company is a shareholder of GABY. And we talk to them about what that means in terms of their ownership. So we want everybody to feel that they're an owner in GABY. And I think that went a long way. The other thing is what we stand for. And, I got into the business because of my sister. My sister was a warrior. She was gay in the early 80s when it wasn't really cool to be gay. She suffered from cancer. She worked in the nonprofit sector and really gave of herself, and especially in the homelessness area. And she was always the first to step up to help anybody out. So that's our culture. She really set the tone. Now, my sister got into cannabis at an early age, and we didn't realize when she was fighting with cancer that cannabis was actually something that was healthy, that could help her. It was helping her in respect of pain. It was helping her just in terms of relaxation. We didn't really look at it from the perspective of, can this heal her? However, she was given 4 months to live when she got diagnosed, and she lived 5 years. And she had very high quality of life during that period. So when she passed away, I was looking for something to honor her. And I first went into the fundraising effort to try to fundraise for cancer. And I didn't find that very satisfying for a number of reasons. And I realized, we had a business together. We were both entrepreneurial in different ways. And so I thought, well, I'm going to build a business that is going to be built on the values that she lived. And she was a tremendous person. And those values are really what drive us day in and day out. The irony is that when we first took over Mankind, some of the employees, were a little bit chagrined. And some of them said, I don't want to be owned by the suits. And I wrote a letter to every employee in the company, and I told them our story, and I told them the values we were built on were the values of my sister. And it changed the dynamic. It changed the way they saw the future. So I think that's part of this of why we keep them on staff. We also educate. We have a lot of opportunities for promotion. We try to promote from within. We don't only educate in terms of the cannabis product, but we also educate in terms of how to sell, how to interact with a customer, how to lead, etc., which gives people an opportunity to build their career out of GABY and out of Mankind. And, we also try to be that collaborative type of employer where before we do something, we do get the input of the team that's going to be affected by what we're doing. And then there's growth. We've actually got a stated goal to build or to grow to 10 dispensaries within the next 12 months. And so there's a lot of opportunity for growth within the organization, and people are excited about that. So, that's what we do. We still lose people, but we generally have a pretty good track record of keeping people. And we also, the energy in our store is palpable. You walk in and it's really our secret sauce. I mean, the energy is so dynamic and so positive. I think that really is a draw for the consumer.
What about direct sales? Are you nervous about the direct sales happening in California? I'm hearing that is happening more and more often, where online producers or growers are being able to sell their product, brands included, directly to the consumers, essentially bypassing direct shops. Is that true? Have you heard of that? And are you worried that that's going to essentially bypass revenues for you?
I've heard about it coming on stream. I haven't seen a lot of it happening as of yet. And I'm not really worried that it's going to impact our retail sales for a couple of reasons. One is, as you pointed out at the beginning of this conversation, brands do matter, and they matter more and more. And the mainstream consumer is going to become very brand oriented. So the Mankind brand stands for something, the products that we carry stand for something, our proprietary brands stand for something. So I think that's going to attract consumers to continue to do business with us. We are also building out our omni-channel opportunities with curbside and delivery. We built out our curbside and delivery as a response to COVID. But now that things have settled down, we have the opportunity to really build it out as a platform that is really conducive to sales and will provide the information that consumer is looking for. I can see a traditional consumer who's only interested in potency and price being swayed by whatever comes on the market at whatever price is the lowest. But as I said earlier, and as we discussed, that mainstream consumer is going to become dominant at some point in the evolution of the cannabis industry, and they're going to be much more oriented at quality, effect, consistency, experience, and all of those things that we talked about than they will be around price.
Yeah, California is making a ton of money. I was just looking at Headset's report here, and it's $4.2 billion through the month of October for California sales. Although the growth, I'm curious if it's capping out. Are you seeing any kind of adjustments as we're seeing commodity prices continue to go up? Instead of $10 for a pound of beef jerky that you may have seen a decade ago, it's like a couple of pieces, or the number of toilet paper is smaller, or even the visual size of the Cadbury egg is smaller. Year over year sales growth for California is only 1% during the month of October. Have sales peaked? Are people worried about commodity prices in general?
Well, as I said earlier, the instability of the supply chain is a problem for the industry, and that's for the operators in the industry. Consumers see less fluctuation because even when prices are high, the margin just becomes more narrow for the operator, and when they're low, the margin gets a little bit higher. There's not a lot of fluctuation in pricing between what's happening in the market to what's happening in the retail store. The retailers are much slower to respond, and so the consumer really sees a stable market. We also appreciate that there is a ceiling in terms of what consumers are prepared to pay. So when the supply chain goes out of whack and the pricing is really high, we don't have the luxury of just increasing the pricing, because the consumers are very sensitive to that. And, there's a lot of discounters out there that, notwithstanding that they're losing money, they'll continue to discount because they're more focused on market share than profitability. So it's a fine balance that we have to walk. I don't think that the market has peaked. I think that it continues to grow. And I think it continues to grow for a number of reasons. I think that there's people moving away from the illicit market into the legal market for the reasons that we talked about in terms of quality and assurances in terms of what it is that they're buying. One of the problems that we have, and what is keeping the California marketplace subdued, is taxation. As you point out, the state is making a lot of money, as are the local authorities. But at some point, they have to figure out that you can't overtax an industry and expect it to grow. And if they work with the industry, and there's been a lot of lobbying in that respect by some very prominent lobby groups that support the cannabis industry, once the government realizes that they can't tax us to the max and we can continue to grow, once they realize that if they stabilize the taxation into a more manageable level, that the marketplace will grow even faster and they'll get more tax dollars in the door, then we'll really see a surge in growth in the California market.
Do you know if you've seen any issues with some of the manufacturers in your store, or do you only carry your own products? Because what I'm curious about is the supply chain. So as you mentioned, there's some issues there. There's also trade wars that happened before the supply chain constraints that we've seen. Have you seen any issues with brands trying to put product out but don't have access to packaging or whatever else? Where are you kind of seeing issues within the supply chain?
So we carry other people's products as well as our own. Right now, 20% of our flower that we sell is our proprietary flower, but the balance is third-party product. And we have edibles as well as concentrates, and we're working on a vape line. So we will continue to sell our proprietary products, but the majority of the products that we sell are third-party products. Part of our vetting process, and it's quite a sophisticated vetting process that really aligns more to the CPG industry than the cannabis industry. Part of what we do is we look at the continuity of supply. Is this producer, is this manufacturer, is this brand capable of fulfilling on a timely basis? And if they're not, we just find we can't do business with them. We have about 900 different products on shelf at any given time. And we can't afford to have an opening if the supplier can't supply us on a regular basis. So it's kind of like, one strike, we'll tolerate it. 2 strikes, you're out. And if you can't prove to us at the beginning of the relationship that you can, in fact, continue to supply and fulfill on a timely basis, we just can't do business with you.
You mentioned that you're looking at, go ahead.
I was just going to say part of the problem is capital,
Yeah.
right, for these suppliers, right? Because you have to invest in inventory before you can sell the inventory. And that's really comes down to the assessment that we do in terms of whether they can fulfill. Sorry to add that in at the end.
No, that was actually the perfect segue, because that's what I was going to ask next was capital. You mentioned that you were going to grow. Did I hear that you were going to try and add 10 dispensaries?
That's our plan.
How do you do that with capital not being available to you at the traditional bank? How did you get started with financing? Is it available via friends and family round, a credit union? Are you able to bank? Tell me a little bit about the financing and how you're able to scale 10 stores.
So we started out with friends and family, and then we listed our securities on the Canadian Stock Exchange. And then we did a financing about 8 months later in the public market. We've subsequently done another financing just this January 21. And so the public markets are available to us, but that's an equity market. The way we structured the acquisition of the Mankind dispensary was a formula that we're going to use repeatedly. Number one, we gave them some cash up front and we raised that capital on the open market. Number two, we gave them our shares, which we can use as currency, and they can continue to benefit in the growth of the operation. And number three, they carried the financing. They carried $25 million of the $36 million that we paid them on a 7-year note at a 10% interest rate, with interest only for every 2 years and principal paid through every 2 years until year 7 when a balloon is paid. So we got leverage from the fact that the vendors are carrying the financing. The dispensaries that are in our pipeline and the discussions that we've had mimic that formula, and it works quite well because everybody benefits. The other thing that I'll say is that there is more money and new money coming into the market. So not just on the equity side, but there are some debt funds that are coming into the market. And there are some banks, East West Bank did a financing with Harborside about a year or so ago, maybe a little bit less, maybe 8 months ago. They're available. There's somebody that we're talking to about, possibly having some kind of a line of credit. Sundial, through their subsidiary, Sunstream, I think it's called. They're providing financing. They have a lot of cash available, and they're providing financing to the cannabis industry in a number of very creative ways. They just provided a $100 million line of credit to Jushi, and we're in discussion with them. So there's a number of opportunities that are new to the industry that are available for financing that weren't even a year or so ago.
Mm-hmm. How do you think having access to traditional banking would change the industry as a whole? If the Safe Banking Act were to pass, what would that do to the industry, in your opinion?
Well, I think it would grow the industry, and I think it would bring a lot of new money into the industry. So depending on how far the Safe Banking Act goes, at the very basic level, it would alleviate some of the high cost of banking, because when you bank with a cannabis bank, it's expensive. Number two, it will provide for equipment financing and working capital financing, which are just basic to an operation. And if it goes far enough and actually opens up the capital market to the stock exchanges, to a more senior exchange, it will invite new investors into the marketplace, those investors that are reluctant to invest in a company that's traded on the OTC, or who are restricted, like the large banks, because of their federal legislation. So I think it'll make it easier to operate. It'll make it safer to operate, and it'll bring new capital to the industry, which will help us grow much more quickly, and quite frankly, increase values quite dramatically.
Are you seeing more people coming into your stores? I mean, I'm assuming that's part of the reason why you want to expand, as well as just seeing general opportunities out there. But what I'm seeing from Headset numbers on average basket size, it was always above the $65 minimum online ordering price. So the average item price in January was almost $67, and then 65 for February, 65 for March, 67 in May, and till July, right? So after July, it dipped below that $65 mark, which indicates to me that more people are coming into the store, bringing that average price down. So are you seeing more people enter the store now after, July?
We really saw an increase in the number of people entering the store around May, June, when the COVID restrictions started lifting. And some of that was a mix of people that were already coming to Mankind, but through other channels like curbside and delivery. So we saw some movement downward in both of those channels. And we saw an influx of customers in the retail store. We are seeing a dramatic number of new consumers coming into the store. Some of them are tire kickers, they just want to investigate, but some of them do purchase. In fact, I believe that we did an analysis just recently, and I think it was something as high as 80 to 90% of consumers that come into our store purchase something. And we did see a little bit of a dip in terms of the average basket size come July, but we're still well above that 65 average that you talk about.
You guys are traded on the Canadian Stock Exchange, is that right? The CSE?
The CSE and the OTCQB.
Okay. What are your symbols for those?
On the CSE, it's GABY, GABY. On the OTC, it's GABLF, F as in foreign, because we're foreign issuer.
Okay. Great. So publicly traded, giving you guys opportunities to use that capital to kind of look around and see maybe where else you can run around. Are you looking outside of California when trying to expand, or is those 10 dispensaries or retail shops only in California?
They're only in California. We're not looking outside of the state. We think that the opportunity in California is so significant that there's no point in stretching ourselves too thin. We can also more effectively use our capital if we're focused on in one market. We're not having to build infrastructure in every state in which we operate. The other thing is, I say that the opportunity in California is significant. There's no major operator in California. The big MSOs have largely stayed away from California. The ones who have dipped their toe have no more than 4 or 5 dispensaries, and there's only about 5 of the MSOs that have dipped their toe into California. There's only 90 municipalities out of a total of about 390 that have actually allowed cannabis within their 4 corners. And more are coming online as we speak. So the opportunity is going to continue to grow. And then, there's been a lot of mom and pop operators who had a hard time during COVID, who just want to sell and get out. And so I've seen this in other industries. I've got quite a bit of experience on retail consolidation. And before I moved into the cannabis space, I did a consolidation of a radio broadcasting business in Canada. And we grew from dispensary, from one radio station to 50 radio stations across Canada. And we competed with the big incumbents, but we focused on the hard to get locations. And when I say hard to get, I mean oftentimes the location was being sold, or the radio station was being sold by the initial licensee. So, they didn't have a lot of experience in terms of selling and buying businesses. A lot of them had hair on them. Some of them were losing money. In one instance, we had to facilitate a resolution of the partners because they weren't speaking to each other and hadn't for 10 years before we could actually effect a sale. So, as a smaller operator, we're prepared to do that heavy lifting, and we'll create a chain of operations that the large MSOs will just step into. We'll create that infrastructure for them. We'll build the team for them. We'll build the chain. We'll build the brand, and they can just step in and buy us. And I think that's what's going to happen as the industry evolves.
Was that your exit strategy from the beginning, is to build up this massive operations for a buyout, for somebody to come in, or what was your exit strategy?
So we always thought that we would build something and we would sell it. However, having said that, we're profitable, we're sustainable, we've got all the right values and the right culture and the right team. In fact, we probably have one of the best teams in California in terms of retail experience. So even if we don't sell, we're poised to grow, and we'll just continue to grow. So it's not like we have to sell or our business model falls apart. Our business model is about building a company that is sustainable, that can continue to grow on its own, or that would be appealing for a large player to come in and take over. So it's really twofold.
Do you have a thesis on why the cannabis culture in California is so prevalent? I've seen cultivars leave California and become popular in Colorado, and then they make their way to Washington a few months after that. But it always seems to stem from California. And I mean, we could go outside of California and say auto regulations are coming out of California. What is it about the culture there that kind of leads, certain trends?
Well, California is a tastemaker market in every respect from a consumer level. So, in the health food industry, products that launched in California, were successful in California, took off across the United States and were adopted into other markets. And that's a primary example of a CPG industry that really grew in California out of the health food industry and the organic industry. So California, people care about what happens in California. They don't so much care, no offense to Washington or Oregon or Colorado or any other state in the union. They don't so much care or are influenced by what happens in those other states. California, people watch what's going on in California, and they have aspirations to acquire products that have been successful in California. So if you can succeed in California, and it's a tough market, but if you can succeed in California, I think you've got a ticket to succeed everywhere else.
Hmm. Are you guys looking at lounges? I know cannabis lounges are kind of starting to become a thing for that user experience that we mentioned earlier in the conversation. Is that on your radar? Are you creating ancillary stores next to you in anticipation to open up lounges? What else are you looking at in addition to your regular rec shop?
So we're not actively looking at lounges. My view is that the lounge business is a totally different business than the retail store business.
Mhm.
It's more along the lines of a restaurant business. The opportunity that we have to build out our omni-channel, to build out our not just our retail store, which we're heavily focused on, but also delivery and curbside, is so large that I think having a lounge is just a distraction. I'd rather wait and see how lounges take off, how they adopt, how they evolve, what the rules are around opening them, and how the consumer uh, enjoys them and adopts them before we make a move like that. It's an experiment right now, and I'd rather go for the sure thing than the experiment.
Hmm. We talked a lot about a lot today. Margot, is there anything else that I left out or anything you want to touch base on?
I don't think so. We talked about the foundation that Mankind provides us. It's a great dispensary. It's got strong sales and strong EBITDA. We talked about our retail team, which is, like I said, not to sound arrogant, but I think we have one of the best, if not the best, retail team in California. One of the things I'll mention is that I believe that GABY is undervalued. People don't yet realize the opportunity in GABY. So if you have investors listening, I would encourage them to go to our website, and I would encourage them to read our press releases and look at what we're doing. We've been evolving over the course of the last 2.5 years, and we've become profitable. Our historical financial statements tell a story of the evolution. Our future financial statements will tell the story of the opportunity.
All right. What if there's skeptical investors out there, who are looking at you on the OTC, who want to see an uplisting? What response do you have for some skeptical investors out there looking at GABY?
Well, in terms of an listing, we have an opportunity to list on the QX, the OTC QX, which we're looking at, and that's about as high as we can go in the marketplace right now until the Safe Banking Act is passed and the capital markets are opened up. I would say, dip your toe in and look at what we've talked about. Look at what we're publishing. In the first 6 months of operation, we've already cut 2.5 or just under $2.5 million in savings from the day of acquisition. So we know what we're doing. We know how to operate. That's a lot more than I can say for a lot of other operators that are making acquisitions. So at the end of the day, you want to back a team, right? You want to back a story, and you want to back a good team. And I think if people listen to our story and look at our team, they'll be impressed.
All right. Well, we'll have them take a look at it, because we're going to put some links in the show notes for you to contact if you're on LinkedIn. We'll put all of that stuff in the show notes. How can they get a hold of you other than looking at the CSE for GABY? That's the ticker symbol GABY, or GABLF on the OTC. You guys on social media, website? How can they get a hold of you?
Yes, so GABYinc.com, mankindcannabis.com. We are on LinkedIn as a company, so LinkedIn company GABY Inc. We're also on Twitter as GABY Inc. We're also on Twitter as Mankind Cannabis, and we're also on Instagram as Mankind San Diego. I personally am not on any social media, but people can reach me at Margot, Margot, at GABYinc.com, and I answer every email I get from interested investors or existing investors.
Excellent. We'll put as much of that in the show notes as we can. But I think with that, we're going to have to roll this one up. So I want to thank my guest, Margot Micallef. She is the founder and CEO of GABY. Margot, thanks for being with us at the Talking Hedge.
My pleasure. Thank you. It's a great discussion. I really enjoyed it.
Likewise, I appreciate it. Well, I'm Josh Kincaid, and this is the Talking Hedge. So don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.